Shares of Chinese property developers listed in Hong Kong surged at the open following a local media report that a number of additional measures will be introduced to support the real estate market's recovery. City Holdings rose 29% today. Country Garden jumped 32%. Logan Group rose as much as 38%. And again, Longford Group jumped 22% earlier in the session. The report said there would be financial support for real estate deals and projects, including loan extensions to developers. The move is the strongest sign yet that Chinese policymakers are easing a years-long clampdown on the property sector, one of the biggest drags on the world's second-largest economy, along with the nation's zero-COVID policies. For more on this now, let's go to Stephen Innes, who is managing partner at SPI Asset Management in Bangkok. Stephen, many thanks for being with us today. So the rescue package is aimed at bailing out a real estate market really mired in a record slowdown and a deepening liquidity crunch. How effective do you think this package can be, and what's the situation now?
Well, I never underestimate the power of stimulus from China. It's very, very significant. I think policy action itself is finally showing the potential to move markets, and it did this week, and it did last week. I think President Xi's tighter grip on power and the dire situation in the economy has finally reached a point where bad news is being perceived by as good news in the market, in the sense that China is going to start stimulating the economy again. They were very reluctant to add stimulus when they were in COVID. That's because you don't get that multiplier effect. In other words, people don't borrow. Now that people are starting to come out a little bit, they're starting to put that money back in the system. And I think this is what's driving sentiment right now.
Absolutely, Stephen, you're right. I mean, the movement we're seeing is a lot of volatility at the moment. Some developers are surging 38% at the minute. At the same time, we are seeing China's yuan strengthening, leading gains across Asian currencies, and amid growing optimism, obviously also over the scaling back of some strict COVID measures. What is the trajectory for the yuan, in your opinion, in the next 6 months?
Sure, I think it moves tangentially to the reopening narrative, and by all accounts, we're moving towards that reopening. I would expect the yuan to trade back down to the 675 level gradually by mid-2023. This is partially predicated on the reopening, but also predicated on the stronger economy, which are going to drive yields higher in China. That'll narrow the yield differential between China bonds and U.S. bonds, and that's where the real support via Forex markets is going to be driven by for the yuan.
Stephen Innes, many thanks for your update.
Thank you.